All right. Okay. So, well, let's start with the Nasdaq today. I think Nasdaq is important index because you know there's so many talks on the global market collapse. There's so many talks on market crash, and there's so many different reasons behind it. And a lot of these different reasons that people are talking about. The inflation, the Fed's printing money. Sooner or later, the financial is going to collapse, and all different issues, and the China, the Greece, all of that. I agree with it. I really do. I mean, I really think this market shouldn't be up this much. I think we should have a crash. I really think. We should. But what I think it should do, it doesn't matter. That's the beauty of technical analysis, guys. That what I think it should do is doesn't matter. We have to pay attention to what it's doing and then find probability out of it. I really think we should. I really think this market should just completely crash. I think that will be a norm. I think that will be the normal thing. I really think so. I don't even think the market should be this much up anyway. But the reality is, it is. It is up this much. And even you can see this chart here. Even with this kind of decline, it just we're back up here. What happened? It's almost like in 3 days, just everybody was dreaming, right? They just woke up one day, the market was down steep, and then now like they just blinked their eye, and then like, oh, we're back to 107 level on the Qs. I mean, I get it. There's still levels on the Spider and Dow Jones that they are concerning. Yes, again, but when is the last time that we saw market that isn't concerning, right? Market is always concerning. Market is always fearful. Market is always great. It's always shenanigan. It's always chaotic in this market. Finding order from the chaos is you and I, our job. And there's a beauty in that. And that's what technical analysis comes from, right? So anyway, enough about renting there. Let's actually look at the chart action here. I do want to start with the Nasdaq. Again, if you have any questions along as I go with it, feel free to contribute. Feel free to say anything, whatever you want to say, or whatever you think that I'm not accounting something data or aspect. Just keep me updated or let me know about it. But if you don't have anything to say, feel free to just listen to me. I thought I'll share this chart with you guys. This was a chart, we this is one of the market update that we talked about at the club here. And this is one thing we talked about on the Nasdaq yesterday. And what we are seeing here, what you're seeing in this chart is that this is what we call a major pivotal level. You can also call it a congestion zone. Okay, why is this a congestion zone? It's because it is a pivotal level. So when we get to this level, you can see that there's a blue dotted line, and then you can see the pink inside. So this is a level where you're gonna find a lot of sellers and you're gonna find a lot of buyers. So that's what we call a pivot. That's what technicians gonna call a pivot, right? A pivot. It hits it, it changes direction. So this is what we call a major pivot going back all the way to December 2014. Obviously, you can see how important this level is looking at these red arrows. And it's important that we understand this because this is a level that eventually what you want to see is if you're sellers, you want to see this level not overcoming. Okay, so then once the buyers overcame this level, you can see that they were able to get back up its trend. You see, so many people like to call traps all the time without really understanding the nature of traps. Okay? So you can call this a bull trap or whatever, but it didn't. What we did was we held this level. So we came down, we got up again, we came down again, and we found this level of support. Why this level became support? Well, because it was a resistance in the prior time. And then got back up again, and we created new highs here. So you can see that we got a high, higher high, and a higher high. That's what we call an uptrend. So, I mean, pretty much about 8 months, 9 months, we're in an uptrend. Yeah, it was zigzagging. Yeah, it wasn't smooth at all. right? But it was an uptrend. You gotta understand that. And then we did this. Let me tell you something about this. Let me just tell you something about this move right here. Go back to history and study that and see what are the probability you're gonna see something like that happening. If you're experiencing this, this is a very rare occasion that you're gonna see this, and there are so many people out there always wanna find this kind of move, and that is a low probability setups you're gonna look for. That kind of stuff is not gonna happen a lot. So if all your setup is based on abrupt sell-off, you really saw this happening. We saw this happening back in 2011. And then we saw this happening in late 2015. So you had to wait for 3-4 years before you see another thing happening like this. You see that? Because you and I, we're not here to gamble. We're not here for one occasion. This is our vocation. This is our career. We're going to do this for the rest of our life. We're going to do this for 10, 20, 30 years. So it's almost aberrant for you to think, hey, this is the setups I'm going to look for, man. I'm going to look for these kind of setups so I can make quick money fast. That's what I do. Well, you're going to be waiting another 4 or 5 years because this kind of stuff does not happen often. Just keep that in mind because, anybody can get lucky and call something. And here's a problem with that. Let's say you did call it. You just felt it. Let's just say back in, July, late July, you just felt it and you're deep down in the gut. You say, you know what? I know, man, right here, the market is going to crash. I'm going to buy shitload of puts right about here, right? And you got it right. And you made so much money on that trade. Tell you what. Now that you think this works, now you think you master the market, and now you're gonna go back and try to look for something like that. You're gonna find that it doesn't work. The longer you stay in the market, all the gain you made on this trade, you're gonna lose all of it and then some more. How do I know this? Because that's exactly what I did back in the day, and I think most people go through that, right? Be honest with me. You've been there. You did something. You called it. You time-stamped it. You tweeted out, and you were proud of it. And then you realize, and then you said, "I found the trick how to play this market." And then you try to apply the same thing, and it does not work. Anyway, so what I'm trying to get at with that scenario, right here, that don't look for this kind of setup. This does not happen often. Yes, it does happen. It's very rare you're going to see stuff like that happening. What is likely to happen is a trend. That trend gets up for years on end. So stick with the trend. Stick with the primary term uptrend and respect the trend. Once in a while, you know what? You're going to get shenanigan like that. This market is going to hate you. That's what it is. That's what it's designed to do. Otherwise, everybody's going to be in the market, right? So this is very, very important because today, obviously, we progressed much more. We see a follow through right here from yesterday's this is the analysis. But I really wanted to make sure this is not a head fake because this is a market that we're dealing with. There are a lot of head fakes, right? So what I was talking about is, hey, I want to make sure we stay up here, and there is a resistance coming down around at 107.50 on the Qs. So what I want to see is this thing continuing higher and then possibly pulling back. But when it does pull back, let me see these guys coming back and buying it up. Let me see these guys coming back, buying it up, and then break above the resistance. And once we see this getting above 107.50, which is old resistance, becoming actually old support, becoming new resistance, and we get above 107.50, well above 107.50, I declare your NASDAQ has been reversed. Audio's working fine, right, guys? Anyone? Audio's working fine? Yeah, okay. Okay. For some reason, hold on a second. I gotta do something real quick. For some reason, I can't hear chat. Hold on a sec. Let me get back. Let me get back here. Okay, so yeah, audio is working fine. Maybe you need to turn on your audio. So again, we're just looking at the Nasdaq. There are levels on the Spider and Dow Jones and the Russell. Their levels are different, but I'm just looking at the Nasdaq. But Nasdaq is so strong that Nasdaq might be the key index. You might want to follow Nasdaq because Nasdaq is such a strong index that it could even take all the market with it. Okay, so let's go back to here. So obviously this is a pivot that we just talked about right here. We just cleared that. This is a very, very important. This right here is very, very important, at least in the minor term as well, that this is very, very important that we understand this, that what we establish on Nasdaq is very, very important for the buyers in the minor term. That could lead to intermediate, that could lead to primary. Obviously, anything goes. I also keep saying that because I want you to understand nothing is absolute in the market. Anything can go, anything can happen, and then it can do something else completely just opposite of probability. You could have a 5% possibility, and it could happen that way. As far as the probability is concerned, we must understand that this is starting to look more and more. Again, like the Nasdaq, we're gonna go back and look at Spider and Diamond, but on the Nasdaq, it's starting to look like where buyers are gonna start to get some confidence here. So what I'm looking for here is that we might see continuation here. We do have 50 MA. You can see that pink dotted line right here coming back down right here, but I'm not sure how much weight it's gonna give to the price action. I think if anything is the 100 SMA is gonna give a little bit more trouble than 50, because you can see 50 hasn't been really acting as really nothing much, but it was the 100 that has been acting as resistance. You can see that it was support. There was support there. There was 100 SMA. It was 100 SMA right here. This is a 100-day moving average, simple moving average, right? So it was support here, support there, support here, and the 100 SMA is coming right about here, about 108, 107.90, 108-ish. So I'm guessing that level could act as at least short-term resistance, and we might find some sellers there. I think that is also a level that potentially coinciding with downtrend resistance. So it's right about here. It's about 108, 107. That is, we're gonna find some, and that's actually level that is coinciding with that old support becoming possible resistance, right? So we got the horizontal or the falling resistance there, and we have the 100 SMA coming down, and then we got horizontal resistance. So we got about 3 technical levels that are colliding in this vicinity, 108.50. So I assume I can forecast that we may have move getting up to possibly 108-ish level. And at that level, we're probably gonna find some sellers there. Though anything can happen, it can go straight up. It can just break right through it. Sometimes what happens is if we're dealing with the V-shaped move higher, this is what I call jumping over the fence. Another scenario could be that we could have another bullish move tomorrow. Let's just say we have a strong bullish move tomorrow, Thursday, and Friday morning we gap up. That's what I call jumping over the fence. And many times what happens is when the buyers don't want to deal with this resistance, they just jump it up. That's what we call jumping over the fence. This is kind of like it right here. This is a resistance right here, right? This is a resistance. We're down here. We jumped. Because they didn't want to deal with that resistance, we jumped. Jumping over the fence. I named it. Jumping over the fence, right? So that could happen. But we wouldn't know until we get there. So you guys understand what I'm saying here. But likely scenario, or if we are dealing with the perfect world, then what I like to see, we get up here, we pull back, maybe fizzle around here for a little bit. Just, you know, make the buyers sweat a little bit, make the bears be a little bit enjoyed that, you know, be enjoyed that this is gonna possibly roll over again, and then get up. And then when we do get up, we make sure we get above 107.50, and if we can stay above it, once we do it, we stay above 108, 108, 109-ish level for about a couple days and stay up, I declare you, NASDAQ has been reversed. Again, nobody can call anything. Nobody can and know for sure anything, right? I'm saying as far as probability is concerned, we have a high chance that we could see a potential reversal on the NASDAQ. And let me assure you that after this kind of decline, where there's a lot of fear in the market, also keep in mind that if you wanna if you're working with a small screen or something like that, if you're looking at a laptop or something, there's always expanding. You can expand it so you don't have to look at my face or chat, everything gone. You just click on the expanding icon there, and then my chart will expand like full screen on your screen, so you don't have to, because there's a chat there, there's my picture there, and then the screen is in the middle of it. So if you want to look at it like just big screen, then you just hit on the expand icon. I'll tell you this much right here. These are the levels you want to look for opportunity, right? Since 2009, since it has been reversed, unless you call the bottom here, you had how many chances? 1, 2, 3, 4, 5, 6 chances for long-term position trade. Unless you're day trading, swing trading, well, you might have more chances. But for somebody like me, there's you had 6 major chances. You could look at this 7 chances. That's actually we start getting on the NASDAQ and stuff, on the index as well. But you had about 6, 7 chances, right? 7, 6 chances to have opportunity to go long for next 6 months, a year trade. And this is your chance. When there's a fear, look for opportunity, right? When there's fear, look for opportunity. I wish I wish I knew what I know now back in 2008. This was when I first started trading up here. All I remember just looking at TV and just Kramer coming out saying all kinds of shenanigans. The market was just keep down there. Again, I mean, I wasn't trading heavy or nothing, just playing around, just trying to figure it out. A couple hundred here and there, just like I don't know what I was doing, So this is when I started trading, and if I knew what I knew now back here, oh my goodness, I would have made so much money. You know what I mean? So let me see. I got a chat here. Yeah, I do. So So the question: do you study the larger time frame? Yes. If you've been following me, twotradersclub.com, most of my analysis that I will do is a weekly chart. I recently did weekly chart analysis on the financial sector. I did post on Apple, I think, on weekly chart as well. What was the most recent one? Yeah. So yes. So I don't look at intraday charts. The lowest I'll go is 65 minutes, and only is a specific reason. I don't just look at 65. There has to be a reason why. I'm looking at very minor term. I will not 65 minutes like hourly. I will not go any lower than that. Like 30 minute, 10 minute, 5 minute. That's for day traders. I don't do that. If you're not day trading, you don't need to do that either. Plus, it's so chaotic within those time frames. None of the stuff's gonna make sense. It's nothing gonna work out there. So 65 minutes are daily, but most times what I do is I look at the market on a weekly and monthly and daily, weekly, and monthly, and then that's where I get perspective. Are we still in a primary term uptrend? You must establish that. You must establish that first. You have to understand: are we in a primary term uptrend? You must establish that question first. And then figure out, is there a potential market crash probability? Is there a topping pattern? Is there any kind of reversal signals? Because without understanding we're in a primary term uptrend, what's going to happen is you're going to start assuming things without without tangible data and clear evidences. Right? Dow theory, you must keep in mind is what? Trend. I tweeted this out many times. You've been following my videos. I said this many times. You gotta memorize this. Put a tattoo on your chest or so. Trend is assumed to be in effect until it gives us clear signal that it has been reversed. Clear. signal that it has been reversed. Because shenanigan like that happens all the time. All right. What are the odds we crash 30% plus within the next 2 months as there's a non-confirmation on EM equities, European equities, Japan, etc.? Odds of this market crash, I think the more I see it, I mean, obviously we're looking S&P 500, other Dow Jones, and other indices today. We're gonna look at it today. There are certain signals, and let's actually go to the S&P 500 here. So S&P 500 is actually looking a little bit more like potentially be a topping pattern. If this thing do something like this, and then we start to roll over, and though it could, anything can happen. If we start to see this happening, that could be a major topping pattern. Because what I said something about is this market is not gonna just crash without a major reversal signal. You go back to history, it always gives you signal. 1987, yeah, 1987. Let's go back to 1987. 1987, can I get there? Do I have that chart? Oh, maybe. Right there. I mean, it was a short signal, but it gave us a signal. Right? It did give us a signal, and that thing just came down pretty hard, yes. But if we really look at this in a perspective, even with, yeah, there's a lot of panic and stuff, but technically though, are we still talking about primary term uptrend though? I mean, yeah, that's a steep decline. I mean, nobody wants to be part of that, right? But is that higher lows? Are we in an uptrend? Even with this, are we in an uptrend? Yeah. Maybe if you just held for a little bit longer, hey, we recovered it. I mean, you have to held it a little bit much longer though. But there was pretty quick signal there. Right here, this was an important pivot. Right there, this was a left shoulder head, right shoulder, right there. Once we got those below those lows, because lower high. Once you see a lower high, that's where you start to be concerned. And then once you create a lower low, that's a confirmation. But you see, this market loves to fake you out on that too. Like here, like you could see, you got a lower low, and then it never confirmed though. And we came down, looks like there's gonna be another crash. We threw an inverted head and shoulder, faked you out, got back up. You see how this market do stuff like that. So let's just say that you're trading 1987, you're trading stocks, and then you lost a lot of money through this. But then if you understood, let's just say you lost a lot of money, but if you understood this principle, and within this fear, you spot a lot of it up here, up down here. Once we create a higher high, higher lows, and you held it, you made pretty good money. Maybe gained it all back. When you pull back, we created another higher low. If you knew what you're doing in technical analysis, we create a higher inverted head and shoulder, we confirmed it, you bought a lot up here, you made a lot of money. You understood how this was working. We're still in a primary term uptrend. We pull back. You got some higher lows going on here, maybe even full confirmation up here. You start buying a lot up here, and you made just crazy money. So yes, when you're trading, sometimes you're gonna be part of this recession where this decline, and you might lose money. But if you stick with it, that downturn could be your opportunity. Because I think the problem for us is that we don't ever want to face it again. You know what? You might have to. Right? This one, major crash. This is a major crash in 2000. We had multiple signs. We have a lower highs, lower low, low, low. We should have gotten out here already. Multiple low lows and lower highs. Boom. Right here too. high, lower high, lower high, lower low, lower low, lower low, multiple signs. We shouldn't have gotten out here. And let's say you gotten out there and you lost some money, but at least you saved yourself for this, and you understand this market. You're really good at technical analysis. So we had a weekly bullish divergence. We understand invert head and shoulder. You understand all of that, and then you look at here. I'm gonna start buying up here. You know, I mean, it was pretty choppy going up, because I remember what people were saying up here. I remember what people were saying up there. Do you remember? People were saying that we're gonna go to nothing. You're gonna make, you know, major to lower high. And then we're gonna go to nothing. Like they're saying S&P 500 going like 600. I've heard all of that. People always say stuff like that. Back here too. Like this is gonna do stuff like this. We're gonna have like major term head and shoulder, and then it's gonna go to nothing. It didn't. It didn't. And then we're up here. So does that help you? You know, like the world, like Japan, you know, China. Oh, I just kind of focus on the. I don't really trying to put that just because they're weak that, you know, America is gonna be, and it could be. Again, I'm not a fundamental analyst. I don't know. I wouldn't know. I mean, you know, I mean, I do look at their charts and stuff like that, but I usually just focus on the U.S. and look at the chart where it is at. You know what I'm saying? Like we had talks on European stocks, how they're going. When was that? When was a European when they're going through a tough time, and then, you know, because of that the U.S. market is gonna roll over or something like that. I don't know, was it down here somewhere? I forgot, but it didn't, and we continued at least for a while. So let's look at S&P 500. We just looked at, and let's actually look at that spider. We looked at NASDAQ here. Spider. First things first. Looking at the line chart here, you wanna see lows and highs clearly. That's where you go, a line chart. If there's a lot of wicks and stuff like that, you really can't see. Load a line chart here. We can clearly see that that's a higher high. Obviously, if we just look down this way, we're definitely still on a downtrend. Okay, right? We're still in a downtrend. Obviously, we have all these moving averages still coming, so we're still in a dire situation. We're still in a dire level. But if we just look at here, we're cultivating something, are we not? We're cultivating higher high in the minor term, and so we cultivated something today. This is the first time since that flash crash. This is the first time the buyers have cultivated higher high. Because this right here, we didn't know if this is going to be a higher high or if that was going to be a lower high before going lower. So when this happened, I didn't know, you know, nobody knew if that was going to be up and then low and becomes a lower high. If that would have been the case, then this market really would have been, we would have pretty good probability that this market would have possibly even crashed. But obviously, we really don't have what I call primary term lower high. We have some of these intermediate term lower highs, but we really don't have a primary term. So primary term would be something like this. If you want to look at like 2008 market crash and 2002 or 2000 crash and 2008 crash, we don't have a primary term lower high. And you could say, hey, maybe it is getting up there to do that and then crash. And if that's the case, if we get below any of the 184 on the spider, then possibly that this will be a potential market crash. But one thing I understand though is that we just talked about the NASDAQ, how strong the NASDAQ is, and so we gotta keep that in mind as well. That NASDAQ also has to keep, cultivate that. Right, NASDAQ. We did got, let's see. The dot-com bubble. Is that what you're talking about, right? Right. So 2000. Yeah. So this was it. So I mean, seriously though, I mean, when the market goes up like this, you know what? That's not sustainable. I mean, everybody knows that's not. Today's move is much more sustainable than this. I mean, look at that. That's just parabolic. I mean, look at today's move. You know, to me, it seems like it has more pullbacks in between, and it's taking its time. Compared to, you mean, just look at these moves, you know, in between. I mean, these were pretty parabolic, but we started like really, even with this move, actually, I think this move, right, this is what I'm thinking. On the NASDAQ, I think this move made this trend even stronger. That's my argument, that this made this trend stronger. Because now after a pullback, we can have another move, you know, run to the upside. Obviously, you know, because as the price expand, the pullback, the decline, the volatility is gonna get wider and wider. So to me though, this right here seems more just like this. I mean, there's a lot of panic here, just because it's such a big range of price action, but it just, to me, seems just like just what we saw here. It's just nothing. In chart perspective, technical perspective, that's what it looks like to me. But this, that, it just, of course, that's just crazy. And then of course, you know, if you kind of experience this, and then we got up, and then we create a lower high here, and double top, not mentioning this was a double top lower high. So the weight is that much more weightier. It's not just lower high, it's a double top lower high. Get the hell out, right? This was a double top too, not mentioning. So the market always will give you, you know, certain signals. But as far as a primary term is concerned, primary term, because this double top, obviously, that's not a primary term topping pattern. That will be more like an intermediate term, which it did. And then it bounced back up. And then it created a double top on the right shoulder, you want to call it. A kind of like awkward, handicapped looking head and shoulder. You got a little tiny left shoulder here, head, right shoulder on the double top. You should have gotten the hell out here buying some puts there. And once they did that, you could have made some money. And then we kept going lower, and then you study your chart, and then you start making, you know, you get inverted head and shoulder there. You know, you could have gotten more somewhere here. You just had to be really patient, because you know, or you could have an inverted head and shoulder here, the minor term, or intermediate right there. But that right there would have been your entry right here, gotten back up, back to resistance, you know, and then we pull back, we got up again, we pull back, and then one of these levels you can got back in here and kind of hold that through, and then we threw another sign, inverted head and, you know, head and shoulder level, and then that's the level you shouldn't got out, and then, you know, we created another major lower high. You could have bought some puts over here. And so, you know, I mean, I just looked at like 10 years how you could have traded this. And I used to be like, well, you make it sound so easy, Kay. The reason why it's so hard is because every single day, I'm talking 10 years. We're looking at things every single day and overanalyzing things. That's exactly how I'm trading right now. Just what I told you, what I would have done in 2002, all the way to 2007, that's what I'm doing. But again, is me doing even weekly videos is redundant. I want you guys to know that I'm actually repeating things, you know. But I know I have a lot of new viewers, and then, you know, we have a lot of new traders. So I think me repeating things is good. My dad once told me education in origin, it means repetition. So I think, but that's what I'm really doing though. I just want you guys to know what I talk about every week. I'm just repeating like every week. It's I'm saying it a little bit differently. But I know in my head, like, I'm repeating things. But I don't mind. I don't mind. You know, I like talking about stocks. I mean, that's kind of what you do when you're a nerd on something. Like, you're a geek and nerd. You want to talk about it all day long. So I don't mind talking about the stocks all day long, because I'm such a nerd when it comes to that. So what is another question again? What stock is going to push it higher? I think Google. I mean, Google's been strong. You know what? Apple. Okay, I'll just tell you this. If Apple clears a certain level, I'm gonna tell you right now, if Amazon's been strong, Amazon, there's no problem with Amazon right now. We don't even have to worry about Amazon. Netflix, same thing. Facebook doing well. Facebook just looks kind of weird on a weekly chart though. So I don't want to be part of Facebook. Google, we've been long Google since, I don't know, we'll talk about it today. So yeah, Apple, we clear a certain level. Apple, I think we're gonna have some big move ahead of us. Let's go back to Spider here. I already spent 35 minutes. So we have 20 EMA, 10 EMA bouncing back up. We clear recent resistance. This recent resistance is actually very, very important because we are coinciding with this level. If this market was gonna like I mean, this could be a fake, head fake. We don't know that, but this, if the sellers wanted to come and bring this thing down, this would have been it. We bring it down here, so this is what would happen. Let's say, because this is a major pivot. This is a congestion zone. If I draw a line, and I mean, we can still, you know, that could be head fake, but if this thing comes down, then this could be potential level to short. But we gotta make sure we clear that level, because he could come back down and do something like this and get back up. Because this market knows how to freak you out, or how to fake you out rather, right? So as far as a minor term to intermediate term is concerned, we just cleared the very, very important level today. That's not an absolute. I'm not saying just because we cleared the level, hooray, it's gonna go to nothing. No, there's another level. It's right here. So here's what I propose on the spider. Remember I told you guys before, this is a level of fear. This is a level of panic. This is a level of confusion. Why? Because this is a level both buyers and sellers are both kind of not understanding what's going on. Sellers are thinking, well, we're probably going to come back here about 204 on Spider and then hit that 100 SMA or something and then roll over. So there's a little bit of a hope for sellers at that level. But confusion though, very nervous. Buyers at the same time, there's a lot of hope, but still there's kind of fear in the market, nervous. So there's a confusion level right here. So this is what I propose. That could happen. Again, I don't have the crystal ball. I'm just saying, you know, it potentially could happen that way. But it's not going to happen exactly the way I proposed it. But we could go up, pull back, because without the pay, let the sellers have their way. Let the buyers sweat a little bit. That's what this market is going to do. We're gonna keep them in check. Let the sellers enjoy. Let the sellers praise. Let the buyers in check. Let the buyers be fearful. Right? And then get up. Right here. Right here. This is where the spider is going to declare victory. Above 206, 207, 208. We do that, spider reverse, and we'll go to next target, which I might talk about in the next event. So if we do that, that's when you look for opportunity. When there's a fear in the market, that's when you look for opportunity. I had to go through this. I didn't see this coming. I'm just being flat out being honest with you. I had to close some positions, but a majority of our positions, I had to go through this. Yeah. And a lot of them, they're regaining its losses because of what's happening. I didn't know for sure it was going to happen, but I just said, hey, we're still in a primary term uptrend, and the nature of its decline, just the way it came down so fast, there are a lot of times when it comes down fast, it can go up fast. When it goes up fast, it can come down fast. The one thing I fear in this market is a cultivation of a primary term lower high, which we just talked about on the Nasdaq and S&P 500, looking at 2000 crash and 2007-8 crash and 1986, 1987 crash, that it had certain signals. 1987 was much, much faster though. And you could have said, hey, this was head and shoulders right here, okay? Yeah, that was more of an intermediate term. It wasn't a primary term though. This was head and shoulders. It was more of an intermediate term. I decided that I was going to ignore it though. The reason is because how many times we had this shenanigan? Right here. Oh my God, left shoulder, head and shoulder. That didn't play out. You know, I mean, we heard it here. Oh my God, it's going to do that. That didn't happen. It was right here. It's right here. We have left shoulder, we got head, it's going up, it's to roll over, and it's going to go to nothing, right? I've heard it. There's more on the Russell actually. Potential head and shoulders. So that's the level right here. So I think we can get up there. I think buyers have some momentum going into tomorrow. and next few days and early next week, we'll probably can get up to 204. But again, this market, you know, dealing with this kind of volatile market, I wouldn't be surprised there's some kind of gap down tomorrow morning just to shake people out. But we want to make sure it holds about 197 or so in the minor term on the spider, possibly kind of get back up, which is also watch for 10 EMA right there, which is 197.23. So if we can pull back and then gap back up, that could still be as higher high, higher low in the minor term. Right. But looking at more intermediate term, yes, we're still in a downtrend. Looking at a minor term, we're still in an uptrend. So it's interesting to note that, right? Minor term, uptrend, intermediate term, downtrend, primary term, uptrend. Primary term. This is a major, I just made this word up. Major primary term. And then just regular primary term will be like somewhere here. So primary term, major primary term. We're still in uptrend, right? If anything, this right here, to me, just looking at the pattern itself, right there, looks a lot like right here. I'm not saying it's going to go up and have a crash, but that's what it looks like to me. We spent quite a bit, so let's not overanalyze things on the indices right now. I know semiconductor, I wrote an article on the weekly chart, monthly chart perspective. So let me just take a look at it real quick. Semiconductor, you know, we did put in equal lows here. So if you want to build some kind of a primary term lower high, this is a level to do it. If this thing does this, you short right here. That will be a confirmation left shoulder, head, right shoulder. But you know, a lot of times I study a lot of these patterns. Like I go back historically and I study a lot. Just for the fact that the head formed like this, it just loses a lot of its potency. It would have been so much stronger if we would have just went did this. Not like straight up like this, but kind of like, you know, like this. Rather than like just hold, like it just. You see how some of these, they go up and down like this? More symmetrical look to it. Right here too. This one was like textbook, oh my gosh. Right here too. So they have more of a symmetrical look, and a lot of times what they're gonna do, they're gonna fake you out just for fun of it, because I mean it always worked out. So now everybody's shorting here, probably the new traders, and you know, so all the people they're studying the pattern, the head and shoulder, head and shoulder, head and shoulder. Oh my God, this time I'm gonna do it, and you just bet your farm, and then this market says no. Gotta love this market, and then it says I'm gonna do it this time for a little bit, and then it gets back up. So you see here, just looks very, very massive. The pattern is it just to me, I don't know if it qualifies as potential head and shoulder though, but it could still form primary downtrend. So what you want to see, if you're a bear, you want semiconductor like roll over, or you want the whole market to roll over, like you really want to see this thing like going to nothing, like that's what you want to see. But it's not confirmed until you get down here. So still too early to say we're gonna have a market crash right now. Here's what I propose though on semiconductor. We get up, potentially even clear it, give you a little head fake, because gotta make sure let the bears and buyers in check. Pull back, come down to about 50% retracement, and then get back up. And then create some kind of inverted head and shoulder, and then we clear that level, that low, that higher high level. We clear that level. I propose to you that this is a level that the buyer is going to declare victory, and the semiconductor has been reversed. And when that happens, you look for opportunity. What I would recommend you start looking for opportunity now. You start looking for opportunity now. You start looking for your setups now. You start checking your stocks now, and then wait until the S&P 500 and these indices reverse. Once they do that, you trigger. Some of them, if you're too confident with some of those setups, you start getting in slowly with the small positions, just couple or one or so, until you see, these indices confirm. So any questions on these indices? Well, no questions. Very good. Very, very good. I trade this market like it's a game. I know it's not. It's so much more than that, and but you almost have to not care. I mean, we care. It's our money. We worked hard for this money. But you have to play it like you don't care. You have to play it like if you lose it all, like you don't care. Like you don't care. The reason is because psychologically, though, this is why. Because this market, this market is designed to make wealthy wealthier. The whole capitalism that we're in, this monetary system, just do your own research on it, and you might disagree with me. That's fine. That's my opinion. This whole monetary system and this capitalism, it is designed to make wealthy. Go Google search the ratio between rich and poor, and search it by the year. Go back 1900s and today, how that gap gets wider and wider and wider. It's no joke. We have enough resources here in America alone to feed the world hunger. Not even kidding you. America alone have resources feed the world hunger. If our government don't pay money, don't put in like $500 billion on war or home security, I know we're getting into controversial topic here. I don't want to make you mad or nothing, but we can feed the hunger. The world hunger will be gone. But why don't we do that? Greed. The wealthy people want to keep their wealth. That's another topic. Let's go back to stocks. So this market is designed to keep the wealthy wealthier. Do they care if market crash? I mean, they do. They're gonna lose like a lot of their investments. But they have so much money. They have so much cars. They have so much houses. They can still live like millionaire style, and they really don't care. So they're not suscepted by emotion. They're not inflicted by fear. You see, though they're the one who can actually crash the market at the same time. It's ironic, but so only way to win this market is that you don't have fear. Something that I say to my members a lot is that samurai, you guys love Japanese samurai sword fighting movies. I do. There's one good movie, Tom Cruise. What's that movie called? The Last Samurai. That's a good movie. They don't fear dying. That's what they make them such. This is true story. These people like just train themselves, and it's honor to them to go into the battlefield and die. Like it's honorable thing to do. They don't fear. Every battle they go into, they don't fear of dying. That's why they're such a lethal force. You and I, when we come to a battlefield, this is a battlefield, you're ready to just, obviously you gotta be careful in what you do. You gotta train yourself hard, you gotta be disciplined. You can't just be crazy and then, I don't fear, and then tank your account. That doesn't make sense. You're gonna tank your account. But that's how we gotta play this game. So it's best for people who, the only way to remove emotion is you got some extra cash on the side. Because if it's your life saving, and there's possibility you can drain that life saving, there's gonna be so much more emotion in you that you're gonna get very, very emotional, right? It's gotta be kind of like you have your business, your job, and then you have kind of extra cash, you know, and then you have to willing to give it all up. That's the only way to play this game. You know, I know there are different strategies and stuff, but that's what I've learned at least. I mean, you think you can make, you know what makes me sick? I'm just ranting now. What makes me sick is there's so many instructors out there now, so many teachers want to teach you how to trade this, and they say anybody can do this. So that's what they're saying is, you guys still okay here? Hold on, something happened. Hold on a second. Gotta make sure I'm online. Okay, good. Yeah, I have another computer right over here because I gotta make. Sometimes it freezes. Because you know I wouldn't know if it freezes, so I have another one right here just to make sure I'm live and everything's fine. Anyway, so what makes me sick is what they'll tell. I mean, I'm glad that they're teaching people and stuff like that. I've been part of some of those, but they say anybody can do this. Anybody can do this. That's not true. It is not anyone can do any. When anyone tell you that anyone, you know, you look at like, you know, nighttime commercial and stuff like that. They say, oh, I'll teach you how to, you know, flip houses, blah blah blah. You don't need no money. You can be a millionaire. Not everyone can do it. You know that. Same with stocks. Not everyone they can teach you, but because of your emotion, not everyone can do it. Why don't people understand this? Any infomercial you see, like any losing weight products or you know, anything like that, not anyone can do it. You know, the statistically, it's actually true that what is the Weight Watchers, the most biggest weight losing program, they only have like 15% success rate or something. 15%. They're making money off of all these people, but only 15% of people really actually benefiting. You gotta be smart. You know, I know, who am I to tell you guys how to live a life? You know, I might be probably much younger than you, but anyway, let's go back. Okay, stop. I'll stop the ranting. So Intel is not a downtrend after the top largest component of Intel. You know, let's look at Intel. What's Intel again? INTL. Is this Intel? No, this is not Intel. What's the Intel's, anybody? INTC. Aha. Yeah, we had a pretty clear head and shoulder. Right on this resistance as well, so that makes it. But technically, we're still in an uptrend though. That's where bouncing right there. So I mean, like, let's say you went long on Intel, like right here or something, right? Let's just say. And then, you know, this thing started doing this or something like that. And then, you know, let's say you close some positions here, you hold the remaining. And then once you cultivated head and shoulder, you just kind of get out. And then you can get back in though. What you want to do is if it does something like this, this is where you level, get back in. But it looks like we're still in a downtrend on Intel. It looks like we're on a 50% retracement as well. Perfectly, you can see that right on the 50. It doesn't mean that it's the level is gonna bounce, but you know, we had this kind of move, 50% retracement. I wouldn't be surprised if this was a 50% retracement right here. Let's do that. Let's test it out. Move that back. Move this up. Slightly below 50%, but it was right here, and then we had a pretty good move there. So I wouldn't be surprised. This is about 38.2%, I think. That's how you do Fibonacci retracement on high lows. Actually close to 50%. So we went up, came down. We threw a head and shoulder. This is head and shoulder. We went up. We came down to 50%. We got up. And then you do that. We came down to 50%. You do that. Why do I? So the range just gets bigger and bigger, right? First we did this, and the range got bigger and bigger. Why? Because the price action also extended. So that the fluctuation is also that much bigger. Do you understand what I'm saying? So we're right on that 50%. We actually bounced at that level. So I mean, yeah, I mean, you know, Intel still looks weak. And I can't say because Intel's weak that it can't. I mean, you know, well, I would have to see. I mean, obviously Intel still does look like we still need the level that we need to clear. This is a level about 53 on semiconductor ETF. If we just look at semiconductor sector itself, I would advise you to pay attention to, I think, some of those levels, like 650 to 67, 670, 650, 670. This is a level that you're gonna start to see a lot of confidence in the buyers. I don't know if it's gonna straight up though. You could get up, pull back, and then you know, right there, that will be where you will see a declaration from the buyers for reversal. But it probably never gonna make it easy. This market never does. It will go up and do something like this or something. Make sure it does, you know, it cultivates high lows. If it can do that, then it will get into a trend again, right? So we just spent 1 hour on the indices, and most of you are still here. Just few people left. Well, thank you for staying. Let's look at Apple, Tesla, and Google, and let's call it a night. I want to talk about Apple on the weekly chart. So weekly chart, what we got going on here is this guy. This guy's very, very important because that guy is what we call bullish piercing candle guy. I couldn't find example last time. You just look it up. Bullish piercing. Bullish piercing basically gaps down after bearish move. Gap down here. That's where it's open on Monday. It closed on Friday above 50% of previous candle. That's a bullish piercing. And for bullish piercing to start to confirm, just kind of like what you see in the, you know, in campaign, the presidential campaign, they have a lot of, they have causes, and then they got supporters. Supporters come and support them. Well, he has a campaign too. This guy, I call it he, but it's weird. It's not he. This guy, it's he's a bullish piercing guy. So he's a bullish guy. So he needs a supporter. What he needs is somebody who comes and support his cause. And this guy right here next week, he basically is saying, well, I don't want to support you, but you know, there are not many people who's going against him at that point. So he's like, I don't care. And then the next week, there's a little bit more supporter came. And then this week, you can see that now we're trading above the candle. We're trading up here. This is a close. So this is what we call initial confirmation. Initial confirmation of bullish piercing. As far as a probability concerned, when you have a piercing candle or any kind of bullish reversal candle, like bullish engulfing or one white soldier, or you know, stuff like that, or bullish piercing, marbles, not all that stuff, or a hammer. What you need is you need a follow through, and you need a follow through next day candle or next week or some sort. And then if it can close above prior week, then that's the initial confirmation, and the probability increase. Doesn't mean it's absolute. The probability of following through next week, it increases. Doesn't mean it's going to happen because nothing is absolute in the market. It increases. So today's Wednesday, so Thursday, Friday, we got 2 more days to come. And so if we close with another bullish candle this week, there's a good chance that this could continue. doesn't mean they can't pull back. It could. It increases of it being continuing. I'm trying to find some good example, but I can't right now. Cause I'm trying to look for a similar scenario. I don't think we've ever seen similar scenario. Like this is what we call one white soldier. The reason why this is one white soldier, because this thing actually gapped up, right? The bullish piercing gapped down and then went up to 50% of previous candle. This thing actually gapped up. This was a close the week before, and then it closed above the prior week's candle, and then we gapped. This is a bullish piercing, or I mean one white soldier, and then we had a follow through. So once here, it makes it more real. Once we did this cause, right? Remember a campaign. He's having his campaign. He wants to support bullish. He wants to support the bullish cause. And then there's a campaign. We're starting getting more supporters, but people are like, you know what? We're still in a resistance. We're still in a downtrend. That is true. We got lower highs and lower lows. But let's see if we can see a follow through next day. We do see it. And then we pull back. But then if we look at follow this, you can see that how much work this guy did. And I'm not saying that that's exactly what's going to happen. That's like the extreme best case scenario sample or example, like the best case scenario. But that guy can be powerful when you start to see more supporters coming in the way. What's the question here? Let's assume then reverses down. At which level would you say that we have the confirmation of a downtrend? So this is a level that we need to watch. It's a very, very important level. We're probably going to get there. The problem is that the question will be then, when we get there, we're probably going to have a pullback. We might even get up a little bit and just fake everybody out and then pull back. And just, again, this market likes to check everyone. And what you want to see is this thing holding and then getting back up. And this is where the buyer is going to declare victory, right? If this thing gets up to about 120-ish level and then it rolls over, technically it's 94.95 is a level to be a full confirmation. This is a level where it's going to get into bear's trend, because now finally this is now legitimate primary term lower high. This isn't a lower high, this is equal highs. Okay, so we came down because primary term lower high is so much more stronger. It is a primary term lower high, so it could actually reverse a primary term uptrend. The minor term lower high, the intermediate term lower high, it can only do damage in a minor term and intermediate term. That's most people do not understand. It has to be a primary term cultivation to kill primary term uptrend. But if this thing gets up and pull back, that will be primary term lower high. And that will be a primary term lower low. And once we create lower low again, that's when will be inauguration of a downtrend. Personally though, if the market doesn't, if NASDAQ don't roll over, I don't think Apple is going to. You think that, well, okay, that doesn't make sense because, you know, it was down here. No, if you actually go to line chart, do you see that? How it perfectly lined up. It means we're still in a primary term uptrend. That's what it means. So we are still in a dire situation. I give you that. I give you, you know, this is where still there's a lot of fears are accumulating. More of a confusion. This is a confusion area. This is a fear. And this is a panic. 92, 96, 93 or so. This is a panic. Fear. This where we're at a confusion. They're both confused. The buyers are confused. Sellers are confused. They're just confused. This is a victory from the buyers. again, like, you got to understand, just because it gets slightly above what I've written, you know, this market is not going to respect these levels perfectly. So please understand that it will give you head fakes. You got to understand you need confirmation. You got to understand confirmation of it's staying up that level or not. That's the one thing that you want to accumulate as far as skills concerned. You want to know when does that mean, what action do you need to see before you can say that it has a confirmation of staying above certain level, right? That's the thing that, you know, you want to find out or figure out, because every time it's different. Every stock is different. Their sentiment is different. Their personality is different. I'm still holding mine. So we did this, and then we're slowly kind of, you know, gaining back. I'm you know, because maybe I'm still long on this mark on Apple, that maybe I'm biased on this, that I think it's going to do something like this. But if it pulls back, because sooner or later it's inevitable that pullback is coming, what we want to see is a higher low. That's what we want to see, because that's the cultivation, right? So 120 is a level to watch there. Any question on Apple? Oh, this is a week. I wrote an article on this. I thought I'll just share this with you guys. I wrote an article on this, and this obviously, you know, so since 2009, we hit this level 3 times. I mean, we hit this thing 1, 2, like a couple times here, but this is what we call extreme oversold status. Right here, right here, and right here. So we got pretty close. You know, we got to that level there. And you know, last time when we first hit it, this thing actually came down a little bit much lower. Actually, this was actually bullish divergence. This is where I call Apple bottom, because we had a bullish divergence and we had a similar action to back here in 2009. This was also bullish divergence here. You can see that this was bullish. That's very strong bullish divergence right here, right here. With a very strong bearish divergence. This is how I call market Apple top. Very, very strong bearish divergence. 10 reasons why extremely bearish. That's where this is the biggest reason why this is strongest reversal you're ever gonna see. It's a very clean. I've never seen this happening ever. This is first time happening in Apple. And then usually these divergences are never clean like that. Usually they're like this. These are not clean divergences. There are a lot of up and downs. This is a peak to peak. Very clean, very lethal, very potent. So this is why here. But the only difference is with this move and with that move, with this move is we're still in an uptrend of here. This here, we're already crashing down. We already threw out this huge head and shoulder formation. We already had there are a lot of pressure up top. Here we really don't have that much pressure, and we're still in a primary term uptrend. So in my opinion, we have a higher probability here, as far as the sentiment is concerned, that it could bounce back up than here or here. Though it's a similar sentiment. At least bounce back up to this level. I mean, I know last time we hit pretty similar here. This was before the market crash. We got up, and then the market crash happened, and then Apple came down. There's no reason for Apple to come down though, really. 2008, 2009, it's just because of the whole market. Apple was a solid company then, you know, and there's nothing fundamentally was different about it. 2008, 2009, we have the decline. There's nothing fundamentally different about Apple than what happened in 2007. So we got up, crash happened, came down again, and then we get up here, bearish divergence, came down again, bullish divergence, got up. So we're bouncing back up. The question is it going to bounce and do stuff like this, like here? Or are we going to throw in like something like this, like here? I don't know, but as far as I think, just the way the price action is, to me, it might even just do something like that. Again, just I'm slightly biased on that. I would have to let the chart dictate that, at least. That's just my, I guess you could say, my hope. Actually, let's go to Tesla and Google, and let me end this video. We already went an hour and 10 minutes. These things always go so long because I have to address questions. That's actually doing so well because it's above all these moving averages now. That's a good thing. We're above 10 EMA, 20 EMA, 50 EMA, 100 SMA. So you're all along in this. You're in a good seat here. You already cleared the resistance. Today's move is slightly clearing this recent horizontal resistance. This is a good sign there. Even if we pull back down, it's a good sign because this is the first time since July 2015, mid-July, because the first time we creating a slightly higher high in the minor to intermediate term, right? We've been cultivating lower highs, lower lows. What does that mean? A downtrend. For the first time, we got up. And we created higher high there. Again, this thing could come back down and fake everybody out, or it could continue higher because that's sure it did that right here. But the difference is this. Here's the difference on this. The difference is that this thing faked people out after this kind of move. And we had that decline. And then we made a new high. Here, we were coming down from a downtrend and then made a higher high. So there's a different sentiment. So these are the things you have to understand when you're using technical analysis for your trading. You can't just rule everything look at it like a formula. It doesn't work that way. It's case by case, situation by situation, condition by condition. Different stocks act different way. So you gotta master this. You have to understand each stock's personality and characteristics. This is the reason why all the academical trading educations out there is flawed. They can give you some foundational things, but I'll tell you right now, I'll just be honest with you guys, because I was one of the students there and I did not make any money using that kind of formula. Doesn't work. So all the educations out there, it promises you that anybody can trade. It's bullcrap. It's lie. Not anyone can do this. There's so much more than just pivot level. There's so much more than just support and resistance. There's so much more than higher lows and higher. There's so much more than just moving averages. You gotta understand this. The degree that you have to study is more than doctorate degree or lawyer degree. You know what I'm saying? You can't. You don't. What Jack Schwager wrote. Jack Schwager he wrote a book, and he said something about, when you go become a doctor, you have to do like 8 years of studying. When you go to a lawyer, you gotta do pretty similar to that, like 6 years or whatever. But people think when you're trading the market, they think like after reading one book, you're a master of this book, of this career. That's blasphemy. I don't know if he said that. Like that's like the way I'm saying it. That's a blasphemy, right? Well, because I worked so hard at it to figure this out. It's a blasphemy. You can read one book and then like you master this. No. It's so much more than that. It's so much more than just couple things that you code within a 2 months time of period. It's a vocation, it's a career. Can you do it for the next 2 years? Can you do it next for 3 years? Can you do it for the next 5, 10 years? Anybody can go gambling and win. Let's go to Google. Tesla next resistance here about 270 there. So what you want to see, I really want to see something like this. And if we can do that, I think Tesla will be in a good level there. I don't know why. I just don't feel like good about Tesla for some weird reason. So I'm just not in like, I'm not like, I don't know. I just don't know if he's gonna do stuff like this. I just felt iffy about it. And so I'm not in it. I mean, maybe small position if we do stuff like this right here. Maybe that could be your entry right there for position trading, obviously. But then you have to worry about this here, and then obviously if it does pull back, you want to keep it higher lows. So you want to throw your Fibonacci there, and you want it to kind of bounce at that 50% level and then break through. Then this is where cultivation of a new uptrend. and then it could continue higher. They might have a stock split at the time. I don't know. Last one, Google, and we'll call it a night. Thank you very much for staying in with for hours here, and I appreciate you guys hanging out with me. Well, Google's in a good place as far as chart pattern is concerned, because it was dire situation on Google when we started cultivating lower highs like this and lower lows, and we're almost doing this kind of channel action. Do you know what Do you know what nullified all of that? Right here. It's a little bit awkward looking. It's a left shoulder head, right inverted head and shoulder, and I actually thought that inverted head and shoulder was here. Somewhere, I think somewhere here, right here, and then he was gonna do this, and then he was gonna do this. So we went long, like right about here. But again, we weren't like day trading or swing trading, nothing. So, you know, we're gonna hold through this. So that ain't gonna, you know, phase us or nothing. They're not gonna like scare us out. So, because we thought this is a process of nullification. And then, well, got pretty lucky on the earnings there, and then we're still holding ours. And you know, it just, Google is in such a good place right now because the dire situation is gone. This is a place where things were difficult for Google. Let's talk probability. Last time when Google did stuff like this and got out of it, right here, do you know how many years you got into a trend? Well, it wasn't maybe years, but you can say this is a confirmation right here, 2012. 2 years. 2 years of trend. Right? We did this here. And then we did that. About 2 years. So you're here. Can we forecast 2 years of bullish move on Google? So that's one of our long-term stock pick that we did, and I think we're probably gonna hold that for another year or so. What about Google's gap? What gap? Right here, the earnings gap. Like this gap? Is it what you're talking about? What about, yeah, that actually was another, this was more like a, yeah, I mean, you can see, right? Oh yeah, you're right here. So we had that, and then, oh, this is also pretty, you can see with the head and shoulders, faked a lot of people out, and then it had that earnings gap, and then we got out of it right there. And then so if you look at it, 2013, that one was actually short run, about 5 months run. So that was a 5 months run before we did this. And then after that, we started doing this. So if you held it from earnings, you know, right when it gapped up at 490, you're doing fine today, but you have to wait for a while. You hold for 2 years and you're breaking even. But you can see how that, you know, that gap is still open. That's significant. That's significant. Rice traders used to say it's place or play a trade in the direction of a gap. So that's a major gap area that hasn't been filled. So that's in a gap theory, that's uptrend, right? That gap, you see, came down to that level, became major bottom there, and then this gap has been filled. But you can see how we found a lot of buyers at this point. It's because a lot of people who's been wanting to go long on Google, they psychologically they missed it, and then once they gapped it up, they're like, I ain't going up there. I ain't buying it up here, man. I'm just gonna wait until I come back to 600, and then when it did come down, they're like, oh, that's my chance now, so they start buying it. And so that's what it's doing. So Google's in a good spot. I really think Google's in a good spot because of this is adversity. You wanna see a tribulation. This was where things could have got really hectic, but we came out of it. It's gonna do what it's gonna do. You're gonna keep checks. It's gonna keep both people, buyers and sellers, in check. It's not gonna go straight up. That's what market does. But I think Google's gonna do well. We'll continue to watch it. We'll add Google on our midweek update videos now. Apple, Tesla, and Google. These tech companies seems to be. Man, one day Google's gonna own the whole place, right? I mean, Google's crazy. They're gonna like take over the whole world. Well, anyway, what was I doing? So yes. Well, thank you very much for tuning in. Any last words or anything? Last words. Last words. Oh, actually, I'll end the video. Thank you guys. I'm gonna end the video, recorded video.